What's up, guys? It's Cup of Commerce here. I'm Stevie. We got Riley and my cousin Devon. We're going to be reviewing The Intelligent Investor today by Benjamin Graham and the commentary with the beginning with Warren Buffett. This is a great book for anyone who's an advanced investor or they're just getting into it. If you own a stock, read the book. But basically, we'll be talking about the 5 different categories: quality of information, ease of read, is it applicable, philosophical, which makes you think differently, and then we're going to have a 100-point scale at the end. So without further ado, we're going to get talking about the quality of information. So Riley, do you want to start us off? Would you rate this for quality of information?
For quality of information, I rated this book a 95. It seems like every chapter that I wrote got more and more like in depth into what I was learning in like the previous chapters. And then also like there's not really a book that is this like, or I would think like an education that is like this well-rounded and so in depth.
Yeah, like back
to almost take the information from this book entirely and be like if you can only read one book on investing, like it would be this for me. Like as far as the information goes, like it covers everything from bonds, stocks, like you name it, it's like talked about.
Yeah, what I really like about this book for the quality information is not only like the diversity of it, but like how accurate and like just point blank the information is. They don't just state a fact; they'll state the fact, then they'll tell you how they came to that conclusion, and then they'll mention historical references, and then they'll mention the philosophical portions that you should take into account for your own thinking. Like they really don't miss a step when it comes to the quality of information.
They don't miss.
That's why I ranked it at a 92. The reason that I ranked it a little less, but it was still high up, is just because the last time this book was updated was 2007. So, 13, 14 years old. But, take that with a grain of salt, because you can learn a lot from previous generations. And books that were written back then, they were writing them in the times they were happening. It's not like the history. It's as if it was happening in front of you. So you'll kind of experience history repeating itself when you read this book. You'll be like, yeah, the dot-com bubble, we're kind of experiencing a hype bubble. I don't want to give too much away, but they talk a lot about previous financial crashes and comebacks. But yeah, that's why I ranked it at 92. Solid historical references, facts, diverse. But then again, it is a little dated. Yeah, Devon, what do you think?
Oh, I gave it a 97. It's like you said, if you own one stock, you should definitely read this book. It's not what you know, it's what you don't know. And this book is full of things that you didn't know that were important, that when you find out about them, they tend to be important. So what does Warren Buffett say his number 1 rule is? Don't lose any money. Rule number 2, don't forget rule number 1. So an easy read. I gave it a 97.
That's solid, man. All right, well, I think we covered quality information. We're gonna move on to the ease of read. So yeah, I'll start with this. So I ranked it out of everyone the lowest by far. I gave it a 30 out of 100, mind you. So with that being said, that's basically a third of what we ranked Grant Cardone's book and the How to Win Friends and Influence People. Read those in like maybe 2 days, tops. I think I read Grant Cardone's in a day. Yeah. This one took me 3 weeks. It was a thick fucking book. Okay, first of all, thick book, 500 pages for the text. Not even no bullshit. And like 550 if you're talking about the appendix. Yeah. But then when you mark it up and you write in it, dude, it takes forever to read, but that's how you're supposed to read a quality book like this. Like you will miss a valuable lesson if you miss a line. That's why I rank it a 30, because hey, nothing good comes easy, and this was not an easy book to read. You guys kind of agreed with me, but weren't as harsh, right?
Yeah. I mean, I rated it a 63, and I was kind of like going off what you were saying, Stevie. Like there was a lot of like you missed one sentence, you missed one word, and it's like I feel like there's not a sentence in the book that shouldn't be there. If that makes sense.
Yeah, that's how you know it's well written, though.
Yeah, and so I was reading this book. I'm not the fastest reader in the world. I'm not the most like educated.
I'm kind of retarded
either, but I'll do 20, 25 pages in like an hour in this book, and for me, I feel like that's super slow. But I was able to kind of, I don't know, and I guess one other kind of like this kind of made it easy to read a little bit better. It made it certainly longer to read, but if he described like a concept inside of the like on whatever page, there's normally like a definition or like excerpt like clearly like stating what or clearly explaining it again, kind of.
Yeah, I like the bottom of the page, or sometimes in the commentary at the as commentary
We would
chapter.
talk about like corporate bonds or something, and then kind of like roughly explain it in the paragraph, and then like below the paragraph would have like, oh, this is a corporate bond, like this is like everything else about it that you might want to know.
Yeah.
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 Well, I gave it
Devon?
a 65. I meant when I said easy read, I meant when you start reading it, you'll see why it's easy that you're gonna want to pick it up. You'll know as soon as you start reading it that okay, this was an easy choice for me to want to read this book. However, it's not an easy book to read. I gave it a 65 because if you haven't taken any accounting classes or you don't have a basic understanding of balance sheets and income statements, you're going to be on YouTube and stopping and looking.
Yeah.
And other than that, it's just it's hefty. Like these guys are saying, I back everything they're saying. You gotta take your time with this book and really digest it, because if you read it fast, it's your money. So
yeah,
you won't get much out of it if you read it fast.
Right.
You know, you'll be like, oh, cool, yeah, I guess I'll save some money. Yeah. But all right,
I feel
let's move on.
like the majority of people probably read this book and don't finish it. That's my like intuition about reading it.
I hope not.
I don't know, dude.
You better be in index funds.
I hope not either. Dude, honestly,
the last chapter they really emphasize it. So like, unless you skip to it, you'd have to finish it. You know.
Yeah, especially
like, at least
chapter 8,
me, I'm like
chapter 20. If you're only gonna do a few little bit, chapter 8, chapter 20, guys. I just gave it away. That's the secret.
I remember like reading the chapters before chapter 8. Yeah, reading the chapters before chapter 8, and it's like, oh, you'll hear more about this in chapter 8. It was just like referencing
start
that.
with the margin.
They kept
it was like chapter 8 up, man. The entire book.
Start on chapter 20 and then read chapter 1.
Well, all right, let's talk about it applicable. So does it make you take action? Devon clearly made you take action. You want to speak on that?
I give it a 95. I'll kick us off. I think that for me personally, during this coronavirus, I started reading this book a little right before March, so right before the big drop off. And I had a little cash as I was reading, and I was actually about in chapter 8 when the big crash happened. So I was able to kind of buy at a good time, you could say. And it does make you take action. I think that you're a little more confident in your abilities after, because you know now kind of portfolio management, and it's time tested. You're looking kind of at your past history. It makes you a little more confident in building your own portfolio, whereas most people might just give their investment money for retirement to Fidelity or to have it be managed. This book is for people who want to do that for themselves. Okay, if you're not really interested in investing and you want to just give it to an index fund, hey, that's fine. But if you want to take personal ownership, this is a great book for you. So yes, for those types of people.
Yeah, I agree. Like for me, it made me change the way how I invest, mainly because I was mixing speculating with investing. So those are two different categories. It's okay to speculate, and it's okay to have a speculation fund, but do not think that you're investing when you're really speculating. That's when you fuck yourself sideways. So that's basically why.
Let them find that out in the book. That's going to
that's true.
They're going to have to find that out for themselves.
Yeah,
exactly. But so that made me have a separate fund specifically for speculating, and then a separate fund for investing. Yeah, exact gambling. It's my gambling fund. I don't put more than 10%. I don't put 10% of my fucking investment or more ever in that. Right now, I think I have like 2 or 5%. I'm like pennies. You know what I mean? Because it's just to see if shit goes up. Like, oh, sweet, made $50. Didn't think that would happen. Or like, I lost $100.
Gamble, that's fine.
Yeah,
it's gamble, that's fine.
Yeah,
if you're in a position, your house is paid off, whatever. You want to gamble? Go ahead.
Go spade a spade. Don't say it's a fucking ace when that's a fucking spade. You know?
That's right.
Yeah.
Everybody's different.
That's why I said I ranked at 97, because I was like, it made me change the way how I invest. But yeah, what about you, Riley?
Okay, I rated it an 88 just because I guess whenever I was reading it, there was so much information. And while it's good to have that information, I feel like if you overload somebody with like the amount of that stuff inside of one book it kind of makes it hard to make a decision as to like where you want to like, okay, maybe I want to take a little risk, or maybe I just want to, let it sit for 20 years.
Right.
He gives them so many options, and like, oh, you could do, this percentage of your portfolio and this percentage in bonds and stocks and, what have you. And while that is like the nature of our financial system, kind of, I would say, relatively complicated to somebody who would be like walking into it, I guess. But I mean, I guess that was my only reason why it wasn't an A for me, just because it's
a little overwhelming
while
almost, where you may not.
It's kind of an overload in like one like six.
Yeah, that's fair. I suppose I have a different outlook on it because I just graduated from Davis, and I took a lot of like finance courses. Like none of the financial tools were new to me, so they were like
Right.
like
Well, that's why
reviewing
I rated
them
it
almost.
65.
Yeah.
You said
Yeah.
easy read. I gave
Yeah.
it 65. It's not an easy book.
Dude, but my chart app gave it a 30, even though I know all the financial
classes,
tools.
Yeah, if you're not in
It's a
business
hard
classes,
book.
dude, it's
not
gonna be
a
a difficult book. Just the regular concepts.
So then, well, we talked about applicable, making you take action, but let's talk about philosophical, where it makes you think differently. Personally, I thought it really changed my whole outlook on investing. I gave it a 99, which is it's the highest that I would ever give a book. I would never give a book 100. But yeah,
I agree.
It's insane how much it makes you think. I mean, Riley said it himself just now. Like, there's a lot of information, and whether you take action on it or not, you're gonna absorb it as much as your brain can absorb. It's gonna absorb. It's
Right.
not like you're gonna be like, oh, I wish that book had mentioned this. Nope, it did.
Yeah.
So yeah. What about you guys?
I also gave it a 99.
Yeah, go for it.
Yeah.
I gave it a 99. I started off as a Robinhood day trader, and I said I lost some money quickly. I said, "Oh, fuck this! Like, there's got to be a way that like you can do this safely." Like, what I really thought was, how does Fidelity do this? Like, how do the people at Fidelity like really do this? And this, I want to show you guys this one picture from the book, but it's basically from 1900 to 1974. And when I saw this chart, it changed my perspective of long-term investing, because you can see really how time is going to be your best ally. And that day trading is a different philosophy. Sure, that if you're good at that, great for you. That's not for me. I lost money quickly, and then this book is about changing that kind of philosophy for the value investor. And here's the key that I would say, and why I gave it a 99. And Warren Buffett said the same. Some people, when they hear the term value investor, it just clicks with them, and that's for those people. And if it doesn't coin in your ear when you hear it, it's not for you.
Yeah.
So
I rated
dude. I mean,
I think I rated
perfect. Yeah.
95. Yeah, I rated 95 for philosophical, and it was like, I don't know. It really did, like, it makes you think different because it like tells you everything, and it's like, you think you're that like 6-year-old like mechanic at a car shop, and he's like, oh, I've seen everything, kid. When someone brings their car in, but like he saw something new when he read that book. Like
right.
there was always like, I guess like that was kind of like the nature of it too. With all that information, it was just like, okay, like even if it doesn't make you think different, it'll definitely introduce some sort of new concept or something you probably didn't think of. Or even know of.
Dude, there's 500 fucking pages. There's got to be something you don't know in this book,
Yeah, if you think you're a know-it-all and you don't think you can benefit from this book, then that's your loss.
Yeah.
Then I challenge them to read it. If they think they got it.
I challenge to see you in 30 years. We'll see who's doing better in 30 years. The chances are that.
Yeah. I mean, overall, I'll basically sum up our overall. I mean, Devon ranked it a 95. I ranked it a 94. Riley a 90. I mean, that basically goes without saying. We gave it an A. Overall, everybody aggregately we gave it an A. I think that we can all agree it was a great book for anyone to read. What'd you say?
Read the book.
What I really like about this book is that Benjamin Graham's unedited portion from the 70s is untouched, but it's also got additions mentioning from the latest revision of 2007. If this book happens to be published again, you're damn right I'm going to read it again, because I don't think there will be a better book on investing. Like that goes like, I'll take that to the bank, because the thing is what the only thing that deterred me, that I would deter someone is how dated it is, but do not be afraid to learn about history because you can learn a shit ton from this book.
Yeah.
What's it say right on the title? By far the best book on investing ever written, Warren Buffett.
Oh,
Yeah, motherfucker did the introduction
You're a
for
fan of him?
it.
You're a fan of him.
that's a statement and a half right there.
Yeah.
When Warren Buffett's like saying, "I read this and I'm like referring it to people."
And Berkshire Hathaway, look, Berkshire Hathaway's not everybody's cup of tea.
No.
Yeah.
It's but you know, if I was gonna tell my grandmother, or maybe not my grandmother, my sister, hey, you know, who can you invest in, and just, you know, you have a pretty fair shot that your money's gonna be okay, it's gonna be Berkshire Hathaway.
Yeah.
I like Warren Buffett's investment style and then value investing and Coca-Cola type companies. If you're gonna tell the people you care about the style of investing.
Oh, come on, Big Mac.
Cool. I don't know.
Yeah, and just so everybody knows, our aggregate scores were for quality of information. We get ranked at a 95 aggregately, and then a 53 for ease of read. Super fucking hard to read, but it's worth it. Applicable, we aggregately got a 93 score. Philosophical, 98, and then overall, we ranked this book a 93. I think that's a pretty fair rating for this book, considering it's dated. If it was not dated, fuck, I'd put this motherfucker at a 98. You know, like if it was not dated.
They have these on Amazon. Yep. They're like a quick accounting. You could teach your whole accounting 201 in one.
I have that same sheet right here.
Guys, if you have this sheet, you'll be all right in the book. Sometimes shit pops up. You're like, the hell is that? Like, look it up. You'll be good. You got Dr. Google and, you know, YouTube. So.
Yeah, and lastly,
actually,
I just want
to macro, but
same. I want to ask a question for each of you guys, and this will end the video with this. Why should the reader actually read the book instead of a summary on it? So, Devon, you want to know why they should read it instead of actually just a summary?
No problem.
Why take the time?
If you're not going to index your money, meaning you're going to give your retirement funds to Fidelity, you need to read this book. Don't read the summary. Otherwise, if you're not going to read this book, give your money to Fidelity, give your money to Vanguard, and just index it. But if you want to take personal ownership and have the chance to maybe outperform the general market, read the book. Don't do the summary. Otherwise,
dude,